Test 6, Economics, Appraisal 6.1. If the price of an item is increasing, one can usually assume that a demand for the item is decreasing in relation to supply of the item. B. Demand for the item is increasing in relation to supply of the item. C. Supply of the item is increasing. D. Demand for the item and supply of the item are increasing. 6.2. When the market for an item has achieved market equilibrium, which of the following statements is true? A. New suppliers will enter the market and drive the price down. B. Demand will slowly taper off, driving the price down. C. Unmet demand for the item is directed toward demand for some other item. D. Supply and demand are equal, and price and value are equal. 6.3. As an economic product, real estate is distinguished by a. Its homogeneity. B. Its variety. C. The uniqueness of every parcel. D. Its ability to appreciate in value. 6.4. The city of Stevensville has declared a moratorium on new construction. If demand is increasing, what will be the likely effect on real estate prices in the area? A. Prices level off. B. Prices continue to follow the trend that preceded the moratorium. C. Prices fall. D. Prices rise. 6.5. If Okapi Incorporated, a company that markets its sports clothing worldwide, moves into Stevensville and hires 100 employees, it is reasonable to expect that the town will experience an immediate rise in the demand for industrial real estate, but no other changes in the real estate market. B. An increase in demand for all types of real estate. C. A housing boom, but no other changes in the real estate market. D. An immediate increase in the prices for industrial and office real estate, but no impact on the residential market. 6.6. What is absorption? A. The amount of new space that is added to available space over a period of time. B. The number of houses that are built over a period of time. C. The amount of space that is occupied at any given time. D. The number of available units that become occupied over a period of time. 6.7. When vacancies are declining in a real estate market, it is common for the market to experience a. Rising prices. B. Falling prices. C. Falling construction activity. D. Falling absorption. 6.8. The price for any product is a function of four fundamental determinants of value. These are a. Durability, feasibility, mobility, and location. B. Desire, utility, scarcity, and purchasing power. C. Popularity, recognizability, promotion, and rebate. D. Fungibility, costs, convenience, and uniqueness. 6.9. A town is rapidly growing, but all the buildable vacant lots in the most desirable area have already been occupied. In this case, it is likely that the price of existing homes in that area will stabilize, since the population must stabilize. B. Will increase. C. Will decline, since no further building can take place. D. Will not show any predictable movement. 6.10. If there is a significant undersupply of homes in a market, construction will tend to increase. This is an example of a Supply outstripping demand. B. Demand outstripping value. C. Consumer optimism. D. The market tending toward equilibrium. 6.11 If commercial real estate rental prices are falling in a market, it is likely that A. Demand has outstripped supply of space. B. The market is in equilibrium. C. The market is oversupplied. D. Employment is increasing. 6.12 A construction boom in a market is an indication that prices A. have been increasing. B. have been declining. C. have been in equilibrium. D. have exceeded supply. 6.13 Why is real estate traditionally considered a relatively illiquid economic product? A. Its physical form is fixed. B. Real estate is defined as land, not water. C. It is often difficult to convert to cash. D. It cannot be moved. 6.14 What does base employment refer to in the context of real estate demand? A. The lowest category of employment in terms of wages and desirability. B. The number of persons employed in base industries in an area. C. The number of persons employed on military bases in an area. D. The labor pool available for employment in all industries in an area. 6.15 What is vacancy in real estate market economics? A property that has no owner-occupant. B. The total number of properties of a certain type that are on the market at a given time. C. The absence of certain types of users in a given market area. D. The total existing space of a certain type that is unoccupied at a given time. 6.16 A moratorium on new construction is an example of a local government influencing the real estate market, regardless of demand. B. The natural result of demand exceeding supply in a local market. C. Government promotion of the free market concept in the local real estate market. D. A government policy that aims to restrain a trend of rising prices in the local real estate market. 6.17 Of the following potential influences on a local real estate market, which one would be considered local, rather than regional, national, or global? A. Changes in money supply. B. Federal Reserve interest rates. C. In and out migrations of major employers. D. Trade imbalances with foreign trading partners. 6.18 There is a lot of new construction going on in the town of Florence. Which of the following would most likely be the immediate effect on the real estate market? A. Demand increases and prices rise. B. Vacancy rises and prices fall. C. Absorption and vacancy decrease. D. Supply decreases relative to demand. 6.19 What kind of real estate users are most concerned with neighborhood quality, access to services, property amenities, and quality of life in their demand for real estate? A. Retail. B. Office. C. Industrial. D. Residential. 6.201 Distinguishing feature of real estate as an economic product is A. Its easy convertibility to cash. B. Its quick response to changes in supply-demand balance. C. Its susceptibility to swings in the local economy. D. The easy substitutability of one item for another. 6.21 Bill Parsons paid $150,000 for a house to operate as a rental property, figuring that he could rent it out at a rate of $900 a month. In paying a price based on the property's ability to generate a desired future income, Parsons was motivated by the economic principle known as A. Substitution, B. Anticipation, C. Supply and demand, D. Utility. 6.22 Which of the following situations illustrates the principle of contribution? A homebuyer makes a down payment of 20% instead of the 10% the lender requires. B. A homeowner adds a third bathroom to a house and thereby increases the appraised value by $10,000. C. The appraised value of a house goes up by $20,000 over a 2-year period because of the prices recently paid for other houses in the neighborhood. D. Because of a decline in mortgage interest rates, a homeowner in a certain market is able to list her house at a higher price. 6.23 When a property owner combines two adjacent properties to create a single property with a higher value than the sum of the values of the two separate properties, the applicable principle of value is called A. Assemblage, B. Accretion, C. Progression, D. Subdivision. 6.24 What is the difference between market value and market price, if any? A. There is no difference. B. Market value is a broker's estimate, market price is a precise number derived by a licensed appraiser. C. Market value is an average price derived from comparable sales, market price is a price based on the cost of creating the property. D. Market value is an estimate, market price is the price at which a property sold. 6.25 The first step in the appraisal process, regardless of the appraisal method, is to A. Identify the highest and best use of the property to be appraised. B. Collect and analyze property data. C. Estimate the value of the land as if it were vacant. D. Define the appraisal problem and the purpose of the appraisal. 6.26 In the final step of an appraisal, the appraiser reconciles the value estimates derived by the various appraisal approaches by A. Disregarding the high and low extreme results. B. Averaging the results of all three approaches. C. Weighing the applicability of the approaches and considering the quality of data supporting each approach. D. Choosing the result that is closest to the average for properties in the immediate neighborhood. 6.27 Which of the following statements properly describes the central concept of the sales comparison approach? A. Find the median price of recently sold comparable properties and add or subtract dollar amounts in the subject property to account for competitive differences. B. Make dollar adjustments to the sale prices of comparable properties to account for competitive differences with the subject. C. Find at least 3 comparable properties that are currently for sale and make dollar adjustments to the listing prices to account for competitive differences with the subject. D. Apply an appreciation factor to the price at which the subject property most recently sold and make dollar adjustments to account for competitive differences with comparable properties currently for sale. 6.28 One of the strengths of the sales comparison approach is that it A. takes into account the subject property's investment value. B. Reveals the profit margin of the builder or developer of the subject property. C. Discovers the underlying value of the subject property apart from the influence of competing properties. D. Takes into account the competitive value of specific amenities of the subject property. 6.29 In making dollar adjustments in the sales comparison approach, the appraiser A. Adds value to a comparable that is inferior to the subject property. B. Adds value to the subject property if it is inferior to a comparable. C. Subtracts value from a comparable that is inferior to the subject property. D. Subtracts value from the subject property if it is inferior to a comparable. 6.30 The best comparable property for use in the sales comparison approach is the one that A. Requires the most and largest adjustments. B. Requires the fewest and smallest adjustments. C. Sold most recently at the highest price. D. Is located closest to the subject property. 6.31 A house is being appraised using the sales comparison approach. The house has 3 bedrooms, 2 bathrooms, and a patio. The appraiser selects a comparable house that has 3 bedrooms, 3 bathrooms, and no patio. The comparable house just sold for $200,000. A bath is valued at $7,000, and a patio at $2,000. Assuming all else is equal, what is the adjusted value of the comparable? A. $202,000. B. $207,000. C. $195,000. D. $205,000. 6.32 Which of the following statements properly describes the central methodology of the cost approach to appraisal? A. Apply a depreciation factor to the reported actual cost of acquiring and improving the subject property. B. Estimate the cost of building the improvements on the subject property. C. Estimate the land value and add to this the actual cost of the improvements adjusted for competitive differences with similar properties. D. Add the estimated land value and cost of improvements and subtract the accrued depreciation of the improvements. 6.33 One of the strengths of the cost approach is that it A. Takes into account the amount of money required to develop a similar property. B. Is very accurate for a property with new improvements that represent the highest and best use. C. Results in an actual price in dollars instead of an estimated value. D. Reveals the owner's return on money invested in the cost of development. 6.34 The principle underlying depreciation from physical deterioration is that A. Eventually, a property loses all of its value. B. A property loses a portion of its value each year because of economic obsolescence. C. A property loses the same increment of value each year over the economic life of the property. D. The value lost to depreciation is incurable. 6.35 A property is being appraised by the cost approach. The appraiser estimates that the land is worth $30,000 and the replacement cost of the improvements is $95,000. Total depreciation from all causes is $10,000. What is the indicated value of the property? A. $135,000. B. $130,000. C. $125,000. D. $115,000. 6.36 Which of the following statements properly describes how to apply the income capitalization approach to appraisal? A. Apply a rate of return to the price paid for an income property. B. Divide the income a property generates by a rate of return. C. Estimate the amount of income a property must generate to return the capital amount invested in it. D. Estimate the rate of return a property owner receives from income generated by the property. 6.37 A strength of the income capitalization approach is that it A. uses a rate of return that is required for all potential purchasers in a market. B. Yields an accurate projection of investment income. C. Uses a method that is also used by investors to determine how much they should pay for an investment property. D. Can be used with any type of property in any market. 6.38 A property is being appraised using the income capitalization approach. Annually, it has an estimated gross income of $60,000, vacancy and credit losses of $3,000, and operating expenses of $20,000. Using a capitalization rate of 10%, what is the indicated value, to the nearest $1,000? A. $370,000. B. $400,000. C. $570,000. D. $600,000. 6.39 An apartment building that sold for $450,000 had monthly gross rent receipts of $3,000. What is its monthly gross rent multiplier? A. 12.5 B. 0.01 C. 0.08 D. 150. 6.40 A rental house has monthly gross income of $1,200. A suitable gross income multiplier derived from market data is 14.1. What estimated sale price, to the nearest $1,000, is indicated? A. $169,000. B. $102,000. C. $203,000. D. $173,000. 6.41 A certified appraiser is one who has received certification by a licensed real estate school. B. The Appraisal Institute. C. The state in which the appraiser operates. D. The Appraisal Review Board. 6.42 The act that required federally related appraisals to be conducted by a certified appraiser is known as the Financial Institutions Reform, Recovery, and Enforcement Act, FIREA. B. The Uniform Standards of Professional Appraisal Practice Act, USPAPA. C. The Appraisal Foundation Authorization and Reform Act, AFAR. D. The Federal Institution for Regulation and Enforcement of Appraisal Act, FIREA. 6.43 As a component of real estate value, the principle of substitution states that if two similar properties are for sale, a buyer will purchase the cheaper of the two. B. If one of two adjacent homes is more valuable, the price of the other home will tend to rise. C. If too many properties are built in a market, the prices will tend to go down. D. People will readily move to another home if it is of equal value. 6.44 Highest and best use of a property is that use which a. Is physically and financially feasible, legal, and the most productive. B. Is legal, feasible, and deemed the most appropriate by zoning authorities. C. Entails the largest building that zoning ordinances will allow developers to erect. D. Conforms to other properties in the area. 6.45 Lynn just bought a house. She paid $187,500 for it, even though it had been listed at $195,000. An adjoining property owner, Ken, had tried to buy the property for $185,000, but had been refused. He now offers Lynn $190,000 for the house. Lynn is interested, so she hires an appraiser. The appraiser returns an estimate of value of $200,000. Which of these numbers can be called the market value? A. $187,500. B. $190,000. C. $195,000. D. $200,000. 6.46 A notable weakness of the sales comparison approach to value is that a. There may be no recent sale price data in the market. B. The approach is not based on the principle of substitution. C. The approach is only accurate with unique, special purpose properties. D. Sale prices cannot be compared, since all real estate is different. 6.47 In the market data approach, an appraiser A. chooses nearby comparables, adjusts the subject for differences, and estimates the value. B. Gathers relevant price data, applies the data to the subject, and estimates the value. C. Selects comparable properties, adjusts the comparables, and estimates the value. D. Identifies the price previously paid, applies an appreciation rate, and estimates the value. 6.48 In the sales comparison approach, an adjustment is warranted if a. The buyer obtains conventional financing for the property. B. The seller offers below-market seller financing. C. A comparable is located in another, albeit similar neighborhood. D. One property has a hip roof and the other has a gabled roof. 6.49 To complete the sales comparison approach, the appraiser A. averages the comparable values. B. Weights the comparables. C. Identifies the subject's value as that of the middle value of the comparables. D. Identifies the subject's value as that of the nearest comparable. 6.50 One weakness of the cost approach for appraising market value is that a. builders may not pay market value for materials or labor. B. Market value is not always the same as what the property cost. C. Comparables used may not have similar quality of construction. D. New properties have inestimable costs and rates of depreciation. 6.51 The cost of constructing a functional equivalent of a subject property is known as a. reproduction cost. B. Replacement cost. C. Restitution cost. D. Reconstruction cost. 6.52 An office building lacks fiber optic cabling to accommodate the latest communications equipment. This is an example of a. Physical deterioration. B. Economic obsolescence. C. Incurable depreciation. D. Functional obsolescence. 6.53 A home is located in a neighborhood where homeowners on the block have failed to maintain their properties. This is an example of a curable external obsolescence. B. Incurable economic obsolescence. C. Functional obsolescence. D. Physical deterioration. 6.54 In appraisal, loss of value in a property from any cause is referred to as a deterioration. B. Obsolescence. C. Depreciation. D. Deflation. 6.55 In the cost approach, after estimating the value of the land and the cost of the improvements, the appraiser estimates depreciation, subtracts depreciation from cost, and adds back the land value. B. Subtracts deterioration from cost, estimates land depreciation, and totals the two values. C. Estimates depreciation of land and improvements and subtracts the total from original cost. D. Estimates obsolescence and subtracts from the cost of land and improvements. Tests